So hey guys, welcome back to Accelerated Real Estate Investor with Josh Cantwell. So excited to be with you. Just want to say thanks to a number of our members who have left us ratings and reviews lately. We've had a number of new ones come in. I really appreciate that. And our viewership and listener group has been growing and expanding each and every week. So I just want to tell you how grateful I am to be able to, share this information, share great strategies, all for free through our YouTube channel and our podcasting channel. It just means so much to me. I've been able to meet so many amazing people, both active operators, investors, passive investors, coaching students, vendors, third-party lenders, title companies, all through this podcast. So if you don't have a platform, if you don't have a thought leadership platform, you need one. It is definitely working for me. So I appreciate that. Listen, today I have a fantastic interview for you. The gentleman that I'm interviewing, his name is Spencer Hilligoss. Spencer is the founder and CEO of MadisonInvesting.com. Spencer is a passive real estate investor, a co-sponsor of multifamily deals, and a former technology leader. His company, Madison Investing, has co-sponsored deals totaling more than 5,000 units for more than $600 million. He invests in syndications as a limited partner and then also uses his platform, which is called Madison Investing, to bring other passive investors along with him to invest in multifamily syndications. He formerly worked at Lending Home, where he achieved over $4 billion in origination, working for Lending Home and funding over 600 fix and flip transactions per month. It's pretty wild and amazing. So here's how it works with Spencer, and we're going to talk about it in this interview. He helps busy professionals like you generate passive income. This is made possible by directly investing in commercial real estate projects, primarily multifamily, with their teams of co-sponsors and co-syndicators that are embedded in local markets. So they essentially partner with operators in local markets, and they help them stand up all of their funding. These are opportunities that typically pay out monthly or quarterly distributions. And Spencer basically works to consistently be finding and vetting out deals and finding and vetting out operators. So if you're an active operator looking for additional ways to grow your investor base, you're going to learn a lot from this interview. If you are a passive investor and you're looking to invest in multifamily projects and you're looking for deal flow, you're going to love this interview with Spencer Hilligoss. I'm super excited to have him on. So here we go.
Welcome to the Accelerated Investor Podcast with Josh Cantwell. If you're looking to retire early with forever passive income, you're in the right place. This podcast is the go-to destination for real estate investors, both active and passive, and multifamily apartment investors, both new, intermediate, and advanced. Now, sit back, listen, learn, and accelerate your business, your life, and your investing with the Accelerated Investor Podcast.
So, hey, Spencer, listen, I'm so excited to have you on the show. So excited to learn more about your business. Thank you so much for joining me today on Accelerated Real Estate Investor.
Yeah, Josh, honored to be here. This is a wonderful way to spend a Friday. So thank you so much.
Absolutely. Thanks for carving out some time. And now, listen, I know that you and I have a lot in common, raising a lot of money, done a lot of multifamily investments, 8,000 units that you've invested in with yourself and your team and your limited partners. But what I'd love to hear is something that you're working on right now, like a deal that you might be underwriting today or next week, or a property that you're touring, or an operator that you're interviewing. What is something that you're working on right now that you're passionate about that kind of gets you going?
Yeah, I think I'm a framework guy. We were joking about this before we kicked off a little bit, Josh. I love a good framework. I think it makes great decision making really clear, and particularly when you got to make big decisions quickly. So we are working on, an awesome single asset deal. It's actually one that brought me back to Florida. I was a little bit, not looking super closely at that market for a while, just because we didn't really know where COVID was headed in the big picture last year. But I would say that what allowed me to get clarity in a very busy market. I mean, who could have thought that 2021 was going to be as packed with deal flow as we're seeing right now? It's a very competitive market. Clearly, a lot of people going after these properties. But the thing that brings me clarity, I would say, and also I educate people that I connect with, whether they're investors with us or just other people looking to learn about this space that I have a passion for, Josh. I think of like kind of a 5-point framework that I look at, and and I didn't come up with every single one of these buckets. I just put them together in a way that made sense for us. And so with all of the many people that are out there trying to figure out like who are the right partners to work with and trying to pass along this education to other people to say like, you got to look at people's track record. You got to look at things like even frankly, like their values. Like I'm one of those guys who actually talks about values and like vetting values, talking about communications, the team dynamic, talking about their approach. When you're talking about investing capital as a passive investor in particular right now, which is in growing popularity, and we have people reaching out to us saying like, how do you decide who and where and what to invest in? Frameworks matter, and I kind of picked that up from my technology career in my startup world, which is like, great decisions are typically not made quickly. Big, great decisions are made slowly, usually. But you have to be able to move quickly in this business, particularly if you want to pull the trigger on something. So that is what I'm excited about right now, is because we're able to review enough deals, we're able to like talk to enough partners and like build relationships over time because of like a 5-part framework that we put together. And it's kind of getting battle tested just because we feel like we're having to look at a lot of deals to find the good one.
Nice. So you're putting this 5-part process into play on deals all the time, vetting through deals. So why don't we go there? Why don't we talk about this 5-part process that you're using? And before we jump into that though, Spencer, tell me a little bit more about your kind of money-making strategy. Like, what do you guys do exactly in your words? We've already obviously kicked this off with the introduction, but what do you do in your words? I know that you guys raise a lot of money, you've gotten involved in a bunch of deals, you're underwriting deals, but you come from the technology world where you invest more as a limited partner. So help me understand the role that you play kind of in the capital stack and how your business model is built.
Yeah, happy to. And I am the guy who is 100% open book transparent on everything that we do. It's always been a core value of mine from my corporate world. And we carried that through to Madison Investing, which is the company that I run now, along with my co-founder and COO, Jennifer, who's also my wife. So right now, we do is we connect investors to some of the strongest cash flowing multifamily storage assets across the country. So like limited partners, and we co-invest with them. In fact, I would say our number one responsibility, if you're a passive investor, I mean, you're betting on the jockey, just to use the very common platitude. Mm-hmm. You're betting on the asset manager. And so we connect investors to go find these people. We invest along with them. Before we even do that, we put our own money into them as LPs first. And then we get to know them over a period of time. So it's our job to go out and find out who are the right who to work with. If you're going to go invest a sizable amount of capital into these opportunities. And then when an opportunity comes, we vet that. We look at the market. We decide, is this a market? Is this a sub-market? Is this a neighborhood that is worth taking the investment risk, right? And risk-adjusted returns are a very distinct thing. I mean, there's lots of returns out there on paper. Risk-adjusted returns are what we are actually seeking. I think particularly in the current market context. And so that is what we do. That is what I do. And it's not just me solo doing this. I mean, there's a team around us as well. So my very specific role has evolved. I mean, in the last 2 years, to be specific, Josh. So I previously have been a co-sponsor, a co-GP, taking on a handful of different roles within a bunch of big apartment deals and some storage deals. So, pulling together capital, investor relations, sure. Also literally flying out, walking properties, being part of the asset management team on these deals. Now, over time, we decided, you know what? We want to be able to do this more frequently. We want to be able to connect into a broader audience and help more people do this. So we took the additional step. And I also became a registered representative with FINRA. So now I'm also a co-GP and a placement agent. And that means everything that I do very much on the grid. That means like all my emails, like completely transparently tracked and all that stuff that comes along with being a registered representative. And if some people are like, what the heck are you talking about, man? Yeah. Which is probably fairly common. A lot of folks out there that might be more familiar with that from like the stock investing world, that just basically means that all the transactions that we work on, we share them to our investors. And we often invest in them at the same time because we believe in the deal. And it also just means that I have to get through a few extra approvals and there's a little bit more paperwork involved. And so that's all in service of being transparent and doing things the right way. I very much strive to live in like the black and the white in terms of doing things the right way. And I think that that's how we've tried to scale this business is, connecting investors with deals and doing things the right way.
That sounds great. So let's peel back the onion a little bit more on that. So I'd love it. I'd love to hear that you've taken the step to be a registered representative. I was a financial advisor in my early days, in early 20s, Series 6 license, 63, 65, sold financial plans, worked with clients, but worked for a big brokerage firm. It was kind of under the MetLife, was our broker dealer, their banner. Basically did everything except for stocks. And, you had to kind of sell what the brokerage approved, right? So a registered representative is different because now under FINRA, you're able to represent the deal that's coming in, the operator, work with the passive investor, be the registered representative that connects the dots very legally, right? Earn whether it's fees or equity or whatever for doing so, investing your own money into the deal. I know there's a lot of guys out there that quote unquote co-syndicate, co-sponsor, and a lot of times they're just raising money for a deal that needs money raised, and they're not necessarily supposed to be doing that and getting a quote unquote commission for it. So I'd love to hear that you've taken the extra step to be a registered representative. So before we get into this other conversation, just talk to that for a minute about what you're seeing in the market and some of the dangers of just being like a capital raiser, taking equity in a deal, that kind of is very much in the gray area according to the law with the SEC. Talk to that for a quick sec.
Yeah, happy to. And I can only really speak for myself. I came from a background where I was deep into tech startups that were doing relatively dry things, but solving key problems that some people are like, oh, well, that sounds important, but I don't know how interesting that is. We're talking about things like payroll software for small businesses. I started my career like Intuit, where we were doing tax and financial stuff there. And later on, I led the origination groups at Lending Home, which is the biggest fix and flip lender in the country. And that's relevant to the question, Josh, because I find it very familiar to go through formality and process. And I think that doing that process, doing things by the book, I think that things that are arguably probably the number one theme that I would say is most important for folks who are interacting with investors in this private placement, private real estate deal space is the notion of disclosure. And I think disclosure is just key. And that means like, if I'm an investor, and I mean this as an LP too, because like we just wired funds just literally yesterday into a deal that we're purely investing in as LPs because it's a great looking deal. I even have to disclose that. Like I have to disclose when I'm just investing, and you already know all this stuff, Josh, but I want to make sure the audience understands it too.
Yes, please.
I had to get my fingers fingerprinted into an FBI database. You have to have all your emails literally tracked and occasionally audited, like all these things. I'm 100% comfortable being in that environment because really we're doing things the right way. And so I think that when it comes to disclosure of risks in deals, this is a space where you can go so far in depth. You can helicopter pilot down all the way from at the high level. An investor reads an investment memorandum. They say, wow, this summary, this deal looks incredible. I like the market. I like the property. I like the team. I understand half of that. And so that's around where I want to make sure that our investors and the folks that we work with and the people listening understand that's probably not enough. I think the average person would really benefit from hearing more, understanding more, even if that means a little bit more conversation, even if that means a lot more depth. And then certainly stuff said in writing about like, what are the real risks included, right? There's a lot of exuberance in this market right now.
Yeah.
I mean, it's incredible. I mean, we're on, so, some economists might debate this, but I think we are still in the longest single bull run ever, if you don't count 2020 in the markets. Some people say that doesn't count, but I would argue it does. Longest bull market ever. And as a result, some folks are literally only expecting things to go up. And so how do you go and educate without me just being the curmudgeon and saying, you know what? Yes, I believe in multifamily. Yes, there's killer opportunities to be found out there. That said, read this. And understand this list of key reasons why. Do you know what an illiquid investment means?
Interest rate risk, inflation risk, refi risk, capex risk, operator risk. There's a lot of risks, right? To me, the biggest risk is if you're doing a value add deal, it's the capex risk. And typically on a capex value add deal, it depends on what your exit strategy is. We like to refi and keep. So that's the two main risks. They go together. CapEx risk, meaning hiring the right general contractor, executing the business plan, turning the units in a timely way, sealing, striping driveways, doing landscape, like literally the roofs, the hard CapEx items, and making sure they're done on time and on budget. We have a VP of construction that's got 30 years of commercial construction experience, $50 million budgets. We were happy to steal him, and he does that for us, and we feel very confident in the scopes that we put together. But then there's the refi risk of, okay, well, even look, like right now, we've got a deal. We've been going into this refi for 4 months. Fannie Mae and Freddie Mac keep kicking it back and asking for more information because we bought the deal less than 24 months ago for 9.2. It just appraised for 13.5. We forced appreciate, with a lot of value add. And with COVID, now before COVID, they probably would have stamped that sucker and done the refi, and it would have been done within 60 days. But with COVID, right, they're very, they're second guessing. So send me the financials for April. Send me the financials for May. What's been the lease ups like? All these extra things that, yes, to your point, Spencer, it's like a lot of limited partners don't know to ask these questions. So you either have to be, like in your case, a registered representative or a general partner that tells the limited partner, hey, these are the questions you should be asking that you don't even know to ask. These are the, yes, questions that you should be asking. Matter of fact, I go so far, Spencer, that when I meet a new investor, whether I get referred or they register on our investor portal or whatever, that first call is all about that. Like, I don't spend time talking about us or our deals. I don't even know if they're qualified to invest in our deals. I said, look, whether you invest with us or someone else, here's the questions that you need to be asking that you don't even know to ask. Right? So whether you invest with me or someone else, write these down, make sure you ask these every time. And guys like, oh, great, that's great. And by doing that, what have I done? Of course, I've earned their trust. Now, there's a more likelihood that they'll invest with us, right? So I love to hear the fact that you're going the same lines. I feel the same way. This is a long business. It's a long game, an infinite game. And so to take the extra steps, not only does it help that customer or that investor, but they're probably going to invest more with you, invest more often if you take it slower at the beginning.
Yes.
Too many people are like desperate to close a deal and they're skipping over all the detail. So I'm sorry for that rant. I'm sure you can relate.
I love it. I mean, and just to pile on very briefly, I will say we are seeing that reflected in our business growth, which is that I deliberately tell folks very similarly in some ways, Josh, to the way you onboard new investors. When they reach out and they say, hey, I'd like to join your passive investing program. Can you send me the information on that deal that I found in your portal? And I say, I'm happy to. I would prefer, can we just have a call and get to know each other? I'd like to understand kind of what you're solving for first. I'm happy, I could send it to you, but honestly, I typically don't talk about the deal. I would rather have you ask me questions that you might consider taboo. I want to have that person ask me things like, how do you guys make money? What is your incentive to be involved in this, right? All of these are the most important questions that people could possibly ask. And so I wanted to make sure to just double down on that.
Love it, Spencer. So talk for a brief second about why, and I asked this question, we kind of got away from it. I want to circle back to it and ask it again. Why did you become a registered representative when you knew that you were going to kind of co-syndicate deals, raise money, when other people haven't gone that extra step? Why were you convinced that that was the extra registration, the extra designation that you should have?
Yeah, I mean, I think that if you look at the space from the past decade, roughly, as a guy who was, and admittedly, I was in tech. I did grow up in a real estate household, which we can probably talk about in a second in a different lens. But I would just say I've been in the space for, roughly in the syndication space specifically now for coming up on 4.5, 5 years, right? And aside from residential and other investing stuff. And so now all that said, you look at the span and the legislation and all the macro elements that allowed this space to thrive, like putting together apartment deals with other people's money with OPM and growing this space. I would argue it's actually still maturing and barely even reaching its full potential for what the market will look like in the 5 to 10 to 15 beyond years. And no one knows for sure what's going to come. I don't have a crystal ball. I just see, I believe deeply in doing things what I declare, and I don't have I'm going to let disclaimers here, but I'll just say, I don't know what the right way really is. I know the way that I look at it. And I look at doing things the right way is very, very black and white. You're doing things in a transparent, openly disclosed, fully business savvy, business informed way. And I think that that's just beginning in the market. Right. And I think the syndication space is relatively immature in terms of its business growth. And so I think in 5 to 10 years, I think there's going to be a lot more people on this path and in their business model. And they're going to be wishing that they actually took the steps to go this path much earlier, because also we just worked on, I mean, now we have the flexibility as well, if we want to go work on other things. Examples would be, we partnered on 3 separate funds in January, and we've been, and those funds are still working. In some cases, I have been a co-GP in some of these other partnerships in the past, but now I'm able, if it makes sense, to just partner purely as a placement agent, still investing our own money into the deal, still working in some cases with investors that are repeat investors with us 6 to 7 times over years.
Nice.
And that model allows the flexibility to do it and to do it what I deem is the right way.
Nice.
And so, yeah, just want to give a couple of the benefits of it.
Yeah, love it, love it. So Spencer, let's talk for a quick second about your day-to-day. I'm interested to hear, as a day-to-day operator of your Madison Investing business, I imagine there's 2 trains going down 2 separate tracks. One is finding deals, finding operators to invest with, and the other one is finding limited partners that register on your portal and getting to know them. And then you're trying to connect the 2 of them so they arrive at the train station at the same exact time. So just describe, what does that look like in your day-to-day operation? Like, how are you sourcing deals? How are you finding operators? How are you finding limited partners? And what do you do to kind of bring them together, meaning vetting each one of them out simultaneously? Tell us a little bit about, give us some color about what that looks like.
And by the way, I think I love a good vehicle analogy. And so I think that resonates with me, as a guy who's done that quite a bit for building rocket ships while flying them in the start of the,
Sure.
And so I think very different speeds on those 2 trains. And I would say the speed of sponsor, when we're building relationships with these awesome asset managers, and there's more and more coming out every day, right? Because there's an enthusiasm for this space, and that's awesome. However, when we first started, you're going out there, you're building your name, and I came in with like an upbringing in real estate, growing up in that household, and then also being part of the single family world in a very, very significant way. It built an origination group that did $4 billion in loans and all that stuff. And but coming into commercial, you first go out and you're like, hey, please take me seriously, asset manager that has thousands of units, and eventually that dynamic shifted, right? And now we're very blessed to be reached out to via primarily, introduction and referral and otherwise from sponsors that are interested in partnering either on a deal, but usually we're not interested in like we literally will not jump into a deal no matter how good that looks. We have passed on probably maybe 12 to 24 deals just in the last 6 months that looked great. We had never invested in that sponsor before personally, and I had not gotten to know them over time. So we had to actually just simply say, let's start the relationship, man. Let's start talking. I would love to get to know you better. And we're going to earmark some of our own personal capital before we actually get to know you. We'll invest in one of your deals, and then let's just get to know each other over time. And so that train, it's a slow, deliberate. It's a protection against shiny object syndrome, frankly. It's to make sure that we understand, how does this asset management group actually communicate? Like, are they operating like with modern professionalism standards? But did they know how text messaging, email, MailChimp works? All these different things. Just as a founder, in addition to, can they asset manage? Can they go out and actually do what they say that they do? Do they have this track record? And frankly, I think one of the biggest learning lessons that maybe we can revisit later is style of communication, fit, just fit of partnership. I think that stuff matters a lot, because whether it's within a GP team and you have 2 or 3 GPs, or if I'm joining a GP team or whatever the assemblage of that team is, you're in it for years.
Sure. Yeah,
you got to make sure that everyone understands each other. So that my day is comprised of, building and deepening those relationships over time. It's not a high volume game though. It's not like we're fielding thousands of new sponsors and then suddenly we pick one out of the pack. It's like, no, we have a sponsor roster. We've worked with them over multiple deals. We deliberately are saying maybe we'll add 1 to 2 that we'll start working with this year for this asset class. And that's the time scale that we're thinking about and working on, because that's the business planning lens through which we've looked at our careers in the past, and we looked at this business as well. On the passive investor front, on the LP front, yeah, we feel very grateful that we get a lot of inbound interest now, and largely referral. I mean, like our number one lead source right now is referral. Like, I'm not out there trying to become the biggest face, biggest name in the business. I know, and no judgment to those people that are. We're trying to do things a very deliberate way, in a very intentional way, and that means I'm okay if it takes a little bit longer to get to know the right folks that we want to partner with, multi-deal, multi-year, multi-decade, relationships on the passive investor front, because these are 5 to 7 to 10 year hold periods. I mean, we're talking about building long-term relationships, and it's not about the deal. It's about the 5 to 10 deals over time that helps this person prosper and hit their goals. That's right. The game. And so, anyways, that was a very long-winded soapbox.
Are you ready to automate and explode your real estate investing? We're searching for extremely motivated individuals who are sick and tired of wasting time and want to finally see real results from their real estate investing business. We're searching for investors looking to get to the next level and become a bigger, better version of themselves while being a more successful real estate investing entrepreneur. Apply for mentoring and coaching at joshcantwellcoaching.com/podcast. That's joshcantwellcoaching.com/podcast. I think the message that I'm taking away is, look, you're making investments. I think the last thing you said may be the most important relative to how long you take to find an operator, how long you take to syndicate a deal, how long you take to make the relationships with limited partners. It's because you know how much even longer you're going to be in relationship with that person, 5, 7, 10 years. So if you take 6 months or 12 months to get comfortable with an operator, and you're having multiple conversations with them and looking at some of their past deals, and maybe they pitch you a deal that you pass on, and then you follow that deal to see if it ultimately is hitting its targets, even though you haven't invested in it, it's because you're in it for the long haul. It's one of the reasons why I love multifamily. It's one of the reasons I love apartments and self-storage, residential assisted living, mobile home parks, these kind of investments, because they truly create and make wealth, but not tomorrow, right? So if you have the like, buying the deal is probably the easiest part, right? So people talk about how difficult it is to find deals. Yes, it's difficult, but it's probably still the most easiest part of the process, because managing the asset, managing investors, sticking with it, having that constant long-term infinite gain mindset, and then sticking with it, not making short-term decisions just for short-term profits for a win today, but it's got to be a win that makes sense for a huge group of people over the long haul. That's the message I took away from it. So hopefully our audience is learning from that too. Spencer, let me pivot real quick into your start, right? So you guys, 8,000 units, $800 million in assets that you've invested in, and your registered representative is kind of responsible for putting together. But you come from a tech background, right? You come from building tech platforms, even though you were in the lending space for private lending, still very different than syndication. How did you get started? Why did you pivot into this space, and what were some of the early challenges?
Yeah, happy to speak to it. I think, and as even pre-tech, for brief context for folks, I shared earlier, I grew up in a real estate household. My dad was a broker for 30 years, right? I mean, he was, 30-year residential real estate broker. So I was working in that business in various ways, both as a young kid and then as a teenager doing open houses. And I was sitting there going, well, my friends don't think this is very cool. So tech sounds really cool if you live in the Bay Area. I'm going to go join tech companies. It was a very simple track thought process. And so I got into tech companies, didn't know I was going to end up doing it for 13 years, and largely spent that in the fintech space. And so that was interesting as a guy who wasn't inherently interested necessarily in like the finance world out the gates. Ended up doing, like Intuit, Xero, Gusto. I mean, all these are companies that do relatively key back office problems for small businesses. And what I came out on the other side of that thing, realizing was like, okay, flashback a few years, I stumbled my way into lending home. A mentor of mine kind of nudged me into this company because it was the right time for a certain role. And I found out, wow, okay, so, we're doing $500 transactions a month, like single family flips, and we were lending on these deals. And I was the guy who was in charge of scaling their origination groups and stuff. And I'm seeing the success financially of these investors, and these are flips still, right? I mean, these are one and done. You know, I mean, I can't. You always have to at some point on a podcast get back to it, to the Kiyosaki comparison of like the pipeline and the buckets, in terms of income. So I was looking at these flip transactions, going like, wow, folks are making a really good one-time moment bucket of income on these flips. That model does not jive with me personally. I'm much more of a predictability guy. Like, I'm an operations guy. I like this. I like the notion of something that you can forecast with great predictability, or some. And so I looked at that. I looked at the trajectory we were on personally. We had sizable 401ks. We had the index funds. We had all the bells and whistles personally, and of a mainstream employee, successful kind of W-2 corporate family, right?
Sure.
And I just, the math was too compelling, you know, the math. And also, frankly, I think that there's a push and a pull in every big decision in life, right? And I think for me, the pull toward this world was also seeing that predictability, seeing that like you can change an entire trajectory of someone's financial fortitude if you start pursuing stuff within real estate. And also, I hadn't seen my infant son at the time for like 2 weeks, because when you work in tech companies, you work 80 to 100 hours in an office if it's an early stage A series or B series company. And you know, it's the real deal in terms of work and hustle. And I still work hard now, but I would say the hours are a little bit truncated compared to that. And so a little bit more flexible. So anyways, I quit my career in tech 5 months before the global pandemic hit. That was not obviously in the forecast, but we thrived through it because of that very strategy. We had already started investing in real estate. You know, before we even found syndication, we found large assets though, Josh. I mean, we did go and stumble through the very predictable stages that a lot of people do. We did buy a local duplex in California. You know, we did go buy a bunch of turnkeys in the Midwest, and then we sold them later on.
Sure.
And there's nothing wrong with these strategies. I'm much more of an and versus an or investor personally. I think that like great investing means you got to do a little bit of everything depending on your goals. But we had to stumble through those stages, and we had to go through those steps before we found these larger assets and all the wonderful benefits that come along with them. And now being able to apply some of those principles from the tech world, the frameworks and all that stuff has been critically helpful for us to make sure that we're making great decisions on behalf of and with our investors on the deals that we look at, because there's a lot of property out there and you have to look at a lot. And sometimes the framework is what keeps you from making a otherwise bad decision, because you're just like, oh, you know what? All of these 100 boxes, all of them except for one is checked, but we just can't move forward because that one is not checked.
Right. I love it. Yeah, spending the time to really underwrite at this point, like using tech, using tools and strategies, because numbers never lie, right? Numbers never lie. Where numbers could lie is in the prediction of the future, which nobody really knows. But there's the numbers today. The numbers today don't lie because we know those are really relevant. They're very on demand. They're very timely. We can get them right at our fingertips if we have the right tools or software to be able to get them, just input them into spreadsheets or input them into sort of tech algorithm. It tells us if it's a good deal or not. The question then becomes is, do we believe, and you talk about risk-adjusted return, do we believe in the operator? That's something in the future that we have to try to predict with some reasonable confidence. We have to be able to predict rent growth. If we invest X amount of dollars in CapEx, what does that rent look like? Where can we add other income? Where can we reduce expenses? Now this business plan has to come to life. Those are the unknowns. But the numbers today never lie. That will give us a story. Some deals look really good right now. Some deals look really terrible right now. But it's all about the future, right? Some of the very best residential deals I ever did looked horrible today. Some of the very best apartment deals I've ever done looked horrible when I bought them, but it was all about the future, right? So, Spencer, for you, now that you've had this success and done all these deals and you're co-syndicating, bringing people together, looking at a lot of deal flow, underwriting a lot of deals, talking to a lot of limited partners, what advice would you give our audience, or what advice would you give your kind of younger self on your entrepreneurial path? Like, would you go faster at a certain time, go slower at a certain time? Did you make every decision exactly the way you should have and at the right time? What would you do differently What has your story, your journey told you to say, if I could do this differently, I would, or I did this right. So what advice would you give your younger former self for our audience, from the stories and lessons that you've learned?
Yeah. 2 points on that one, probably. The first would be as an entrepreneur, I would say analysis paralysis hits everybody a different way. For me, I read 24 books, did 400 podcasts before I really went all in. I was still kind of in side hustle while doing very demanding career, starting to get involved in deals, but not really going all in and treating it like a business, was still treating it like a part-time exploratory hobby, right? And I think that the earlier you can just break through and realize, like, pay very close attention to, why am I learning what I'm learning right now? And am I actually going to apply it to something else? And because if you're not going to apply it, you're actually not moving forward, you're stalling, and it's a hobby.
Just entertainment. You're just learning to entertain yourself.
Exactly right. And so that has to be number one. I mean, even just, I would say, 400 plus podcasts. I mean, high quality podcasts like this one, you have to make that part of your education journey. If you're early on in the journey, or even you just need a refresher on core concepts and you want to hear like other people in the business, like Josh, like talking about this stuff, you have to do that. But then go do something with it. I mean, really, the moment you take that action, I know massive action is a very catchy buzz phrase, and there's something to that. And I think that you have push periods. Massive action aimed without a strategy is relatively useless.
Suicidal.
Yeah.
Like lots of action with no direction, lots of action without like some KPIs, some numbers, some goal to hit, some framework to fit it into. I mean, I've seen guys go really fast right into the dumpster fire because they just didn't have, like, what am I doing this for? It's like, let's just go make a bunch of money. Yeah, not really. I used to, when I was much younger and a lot more immature, I used to do that too. Now, to me, massive action could be sitting and thinking for like 2, 3, 4 hours about jotting down notes and writing up strategies and thinking through comparisons. Like one of the comparisons we're going through right now is 3 different third-party property management companies versus our own property management company. So it's a 4-way horse race. And we're looking at this decision as potentially a 10-year, multi-million, tens of millions of dollar decision. Yes. You don't take massive action and just make that decision in a week, right? That's a decision you take massive action on, but it's super slow to make the decision, right? That's
such a great example. And on the personal front, just to briefly add to this, I think we talked a little bit about massive action and making sure it's like just deliberate action, right? Is like deliberate action taken is the first one. The second one on a personal front, and I'd say that I've gotten feedback from so many other folks that said that this was useful now. I'm like, okay, I thought it was rudimentary and I thought I might just be wasting someone's time if I share it, but it was so meaningful to us, which is, what are the goal setting moments, right? If someone is early on in the journey, no matter which direction you're going to go running, we took the time to say, this is the actual monthly dollar amount of income we are targeting as a lifestyle. And what else is that? Like, what is that income number? What is passive income? What is active income? This is not financial advice whatsoever. I'm just sharing literally what we did. But I would say that is a very key element, because the really, the hardworking, inspired folks that are out there that are, signing up for coaching programs. I mean, as a guy who's gone through 4, I'm not anti, but I'm also not full bore jumping in, dropping 5 digits of money into something you don't understand. You got to find what works for you. And I think before you go and do all that stuff, have you sat down with your spouse, your partner? If it's just you, that's going to be a very easy goal settings discussion. I mean, it's figure out what do you need? What do you want out of this stuff, man? You're going to go out and take all this action, because if it all doesn't tie back to that single most important KPI, and financially for us, it was a income monthly number. It's very tangible. It's very simple. And I think that was a helpful and if not critical goal setting exercise for ourselves, because it keeps you honest. It just keeps you honest. Yeah. If you can't tie all your activities back to that stuff, then maybe the activity you're looking at that moment is not worthwhile.
Yeah, I think that's great advice. And what kind of was resonating with me as I was listening to you is I'm thinking about like all the people that are like, take massive action, but without goals, without a goal setting session first. And then the next thing that happens is shiny object syndrome, because they've taken so much action everything looks good. So they
Yes.
start doing everything. And then eventually get to the point where they're ripping their hair out because they probably may have started 3 or 4 or 5 businesses and none of which are making money. They're all bleeding cash. And they're like, well, why did this happen? Like, why am I took massive action. How come I'm not successful? It's because you missed what Spencer said at the beginning, which was the goal setting action to make sure the goal set happens first. You take massive action that has to be in line with the goal.
Yes.
Most people just take massive action and they're like, and then I hear, you probably see this, Spencer, people are like, well, I met this guy, they could be part of my business, and I met this person and they could fit in this role, and I met this person
right.
and they could be a great sponsor. That is shiny object syndrome, because they're just taking all these balls and shoving them onto the same court, but one could be a basketball, one could be a volleyball, one could be a golf ball, and none of them play well together.
Yes, that's right. Well, and
they don't even know what game they were playing because they never did a goal setting session first.
yeah, and it's not a I want to make sure it's clear for folks too how hard fought that this moment of clarity is and was for us. Like 2 whole weekends, Jennifer, who's my co-founder, and my wife, and then that's not for everybody. I'm not saying go out and build a business with your spouse, because that is a very distinct, separate podcast discussion. But like, there were tears, there was reconciliation, there was laughter, there was all those cycles happened in the course of 2 weekends. That was a deliberate series of, are we sure we want to go do this? And this is years ago now. But I think when people talk about goal setting and they say, cool, I wrote down my goal on a piece of paper, that ain't what I'm talking about. I'm talking about really wrestling with big questions about how the configuration of your work and your income is all set up. And that doesn't mean you have to do it in a vacuum either. I mean, I personally, by the way, I don't have my own coaching program. I don't plan to start my own coaching program. There are wonderful coaches that are out there that can help you if you need help with these stuff, and tons of resources out there, even YouTube, man. But I would just say that I wanted to make it clear for folks what we're talking about. It's not just pick the number and go. It's reflecting on it. It's reflecting on what it means. It's on like it's all of that stuff, because if you can't tie it back to that number, so just like you're hitting on in a wonderful way, Josh, like, then why are you doing what you're doing?
Yeah.
In my newest real estate investing book, The Flip System, you'll learn the proven secrets and strategies that I've used to be a successful real estate investor. You'll also hear the story of my journey from quitting my job to doing over 2,000 units of apartments. The Flip System is now available for a limited time, and you can grab your free copy at getflipsystem.com/podcast. You'll learn the same proven principles and secrets and investing strategies that I used to quit my job and pursue a life of financial freedom. In this book, I'm sharing exactly how I was able to personally close over 750 profitable real estate deals, make over 400 private lender loans, raise over $30 million, and acquire over 2,000 units of cash flowing apartments. Get my newest book now for free at getflipsystem.com/podcast. That's getflipsystem.com/podcast. I got to tell this one quick story, and then we're going to finish with our final 5. Is one of our companies is called 950 Management, right? So it's one of our property management companies, and 950 Management has a specific reason. 950 has a specific significance. We make, on average, about $1,350 per year per unit that we own. That's after expenses, it's after debt service, after limited partners. That's the net free cash flow. Okay. 1,350 times 950 is $1.2 million a year. So we started that company years ago under the premise of we need to buy 950 units to make $1,350 per month or per year per unit to make $1.2 million. It was to make an extra $100,000 of net free cash flow per month. And all we talked about when we first started that company is, how do we get to 950 units? How do we get to 950? By really good, smart 950 units, because it had a significance, it had a purpose, it had a mission. And then that $1.2 million of net free cash flow was doing things personally for me and for my business partners. We knew what the significance of that was.
Yes.
That aligned us into say, we're only going to buy these kind of deals, B-class areas, value add in these specific parts of the country, these specific cities. because it all ties back to 950, which ties back to 1.2 million. So that's the type of stuff that Spencer and I are talking about that had a certain significance. It wasn't just, hey, I found this partner and this broker and this lender, and I hope this mishmash of stuff all works together.
Yeah.
It's the opposite,
Yeah.
right? So cool
I
stuff,
love
Spencer.
that.
This has been really
That's
fun.
clarity.
You're getting me thinking. I love the back and forth dialogue here. It's been fun. Let's finish, Spencer, with the final five. And again, you'll be able to find Spencer's information, to register on his investor portal. It's called MadisonInvesting.com. And we'll put all of his information links in the show notes as well. But the final five, Spencer, really quick. Let's jump in. You ready for these? The final five?
Yeah, hit me.
All right. Number one, what's your favorite way to find deals or operators to invest in?
Yeah, I'd say for operators first, I'll just say via other people that we know in the business. Referrals are a wonderful way to find other operators in the business. For deals, from the operators. I sit in the Bay Area, and so we rely on our partners that are based in these other markets. Once we align on the criteria, they find the deal, they send it to us, we take a look at it, we decide, we put it through our vetting process. So that's the ways that we actually look for sponsors and deals.
Nice. How about favorite ways to find capital to invest of your own syndication, or to find partners that invest alongside of you as a limited partner?
Yeah, I'm going to sound like a broken record, but now our number one source of new investors is referral, and so happy investors is the best way to find more investors is via referral. I would say secondarily to that, going on, I did focus heavily on places like LinkedIn. I don't think everyone needs to go out heavily and do social media across the board necessarily, but I leaned in heavily to doing things like LinkedIn, and I did that I posted daily for years, and I'm getting back into it now, but there was like 838 posts. I just pulled the number the other day. And so it's that was a great way to also connect with both new investors and also potential sponsors when we were first building our brand and our awareness.
Nice. Love it. Spencer, what's your favorite place or favorite way to think?
Oof, a 10K run at an embarrassingly slow speed.
Love it.
I just say I'm not a fast runner, Josh, but I do it consistently, and I have done, and I track them and all that. I do probably 3 to 4 runs a week when I'm really humming, which I'm not doing now. I'm very squishy right now, but I would say that usually I want to be doing 4 10Ks a week when I'm really humming, and I'm just sitting there thinking, maybe might be listening to a podcast. It's the best possible way to reflect and think for me, because the blood's flowing and you're getting some solace.
Absolutely. I'm right along with you there. I love to work out and think. Favorite book, Spencer, or piece of advice that you've ever been given?
Yeah. Favorite book would be, at least on the business front, I would say is Essentialism. Essentialism is probably my favorite one, by Greg McKeown. If you're talking about, people feel like they don't have enough time in the day to do X, that book just cuts out all the excuses really well, and it gives you ways to specifically say no. And that's where most people miss on prioritization. So I'd say that's the book. On a piece of advice, I just got to say, go slow to go fast is a relatively overused term from the startup world, but I still believe in it now.
Nice.
And I think go slow to go fast. And what that means is don't you dare rush through the most important stuff, and particularly when it comes to making decisions about people and projects and investments, and take your time. The bigger the decision, the more important the decision, the more time that needs to be taken. And so invest that time, go slow to go fast.
Love it. Final question. Who has been the biggest mentor in your life, entrepreneurial, outside of business, and why have they had such a big impact?
Yeah. Out of respect for him, I don't know if I even discussed if I was going to mention his name on a podcast, so I'll keep him anonymous, but I'll just say it's a longtime friend of mine. It's actually a little younger than me. He has got to be probably the most meaningful mentor in my life. I've worked with him at like two or three other companies, and he has been a sounding board. He's not a real estate guy, but I'll just say that probably the most significant leadership and management mentor in my life. And it's just one of those things that has consistently come back as a recurring theme on values and why I place a premium on working with people that are value driven, and mentors are key, man. And I feel very lucky because so many people don't bump into what I define as a mentor in their life, and they go out and they try to find them, and sometimes they don't, but I feel very grateful to have this mentor in my life.
Fantastic stuff, Spencer. Listen, I know our audience can find your information at MadisonInvesting.com. Any other places that they can go to connect with you?
Yeah. So if you can't find me at madisoninvesting.com, or you'd rather go to like LinkedIn instead, head to LinkedIn, like send me a message there. You could also just email me directly if you'd like to reach out. I'm happy to be a resource, even if it has nothing to do with like one of our deals or anything. Spencer at madisoninvesting.com.
Fantastic stuff, Spencer. Listen, this has been great. I love the conversation, the back and forth today. Thank you so much for joining me today on Accelerated Real Estate Investor.
Yeah, I had a blast. Thank you so much, Josh. And, enjoy the rest of your weekend.
Well, hey guys, listen, I really enjoyed that interview there with Spencer Hilligoss from Madison Investing. Visit his website, madisoninvesting.com. And I look forward to really having guys like Spencer on, because I like to hear about the technology that you're using, the platforms that you're using to bring in passive investors. Now for Spencer, he's not necessarily an active operator with boots on the ground, actually doing the deal, meaning the property management, the CapEx, the asset management, but he's partnered up with other sponsors and other co-syndicators who are bringing the deal flow, running the deals. Spencer's spending his time vetting those deals out and matching up the active investors and passive investors. So lots of amazing tidbits in that interview. If you enjoyed it, man, don't forget to subscribe, right? Go into iTunes or wherever you get your podcasts, hit the subscribe button. If you're in YouTube, hit the subscribe button so you never, ever miss another episode. And also, if you feel compelled, open up your phone right now. Go ahead and open it up. Go search Accelerated Real Estate Investor in iTunes or wherever you get your podcasts, and leave us a 5-star rating and review. It would mean so much to me. Thank you so much for that. Listen, guys, I hope you enjoyed this interview with Spencer, and we'll see you next time. Take care.
Hey, Josh here, and do you want to win a free Accelerated Investor t-shirt? All you have to do is give Accelerated Investor, our podcast, Accelerated Investor, a rating and a review on iTunes, okay? Do that now. Then send us a screenshot on Facebook or Instagram or Twitter. What we're gonna do then is every week we're gonna pick our favorite rating and review, and we're gonna send that person a free t-shirt and maybe, again, some other cool, fun stuff as well from Accelerated Investors. So, again, don't forget to take a screenshot. Leave a rating, review, take a screenshot, send it to us so we know exactly who you are. And then once a week, every week on the podcast, we will announce a new winner. Don't forget to take a screenshot and send it to us so we know exactly who you are. We'll announce a new winner every week.
You were just listening to the Accelerated Investor Podcast with Josh Cantwell. If you enjoyed this episode and learned something new, help us build the AI community by leaving a review and 5-star rating on our iTunes podcast channel. Also, don't forget to subscribe so you never miss another episode. To see passive investing opportunities, visit freelandventures.com/passive. To start your journey toward the lifestyle you've always dreamed of with multifamily apartments, apply for one-on-one coaching with Josh at www.joshcantwellcoaching.com.